My recording. Please share your screen with the PDF. Take that first chapter as prospectus, and please start explaining bit of things what you have read through, and content of that one. And then we can ask 5 questions from our side. Anybody can ask those 5 questions on the chapter of prospectus only. Yes, madam. Deepa, madam, you are able to hear? Hello.
Chitranji, are you speaking to me?
Yeah. Please share your screen, and share the PDF, and then let's talk about that readout. Just
Sure.
read that whatever you understood from the chapter.
ఇది బ్లాంక్ చేసి స్క్రీన్
Share.
లేదు, ఇది పెద్ద అయిపోయింది ఆటోమేటిక్గా ఇందులో నాకు తెలియదు. చిన్న చేయాలి.
Last name?
Diva ma'am, you're ready? Please unmute and share your screen, please. You're able to hear me?
Hello, Chitranji.
हाँ बोलिए.
We have Deepa Batraji. See, I thought it Deepa Batraji presenting today.
Okay. I don't know. Deepa Batra is not aligned in. She has not said anything on that one. Okay, this is Deepa. Yeah, I think you are going to present. Is it Ramesh sir is there in this forum?
I'm here.
Sir, you want to do the you want to start with this one?
Yes, I can start.
Please share your screen, and you have 5 minutes to start. Once your 5 minute is there completed, we'll just let you know, and then we can ask for 3-4 questions. Quick question. Don't worry about that. We'll not try to scare you out. Please.
Yeah, okay. Yeah, 1 minute. All right, can we see the screen?
Yeah, still
Hello?
not. Yeah, we are able to see now. Please go ahead.
So how it is, like, just to read out, or how?
Yeah.
How it is,
Whatever
like,
just read out whatever the summary you want to present. Just go across with that.
Yeah, I'll just read out the PDF whatever we have. So
No
from
worries.
there, okay. So basically, prospectus. A prospectus is a legal document that a public company issues to the potential investors, providing them with important information about the company's business, financials, and other details. Investors perform a due diligence by themselves for private companies when they are investing, so the prospectus requirements are not triggered here. The Companies Act 2013 under Section 23 mandates all public companies to issue a prospectus when they offer their securities to the public. For instance, through an IPO or FPO.
Yeah, no worries. Yeah, go ahead.
Yeah, the types of prospectus. There are 6 types of prospectus: draft red herring prospectus, red herring prospectus, final prospectus, shelf prospectus, abridged prospectus, deemed prospectus. So now we talk about the types in detail. Draft red herring prospectus. This is a preliminary document that contains information about the company, promoters, management, financial performance, and the proposed public offering. It is called a draft as it is subject to changes and revisions based on feedbacks received from SEBI. Once SEBI approves it, it becomes a red herring prospectus. Yeah. Now we talk about red herring prospectus regulated as per Section 32. This document contains all information disclosed in DRHP and does not contain the details of the issue price of the number of shares being offered and is to be filed with the registrar at least 3 days prior to the opening of the issue. Although incomplete, it still carries the same obligations as are applicable to a final prospectus. The final prospectus. This prospectus is filed after the closing of the offer of securities and includes the below information that was not provided in the red herring prospectus: the total capital raise, security huge money, huge amount, it may want to raise that money over a period of time. The Companies Act 2013 allows that. If money is raised in one shot, the company will issue a prospectus. But if it is intended to raise money over a period of time, say over a year, does it have to issue prospectus again and again? No. A self prospectus enables a company to do that without having to prepare a new prospectus each time it raises the money. Shelf prospectus under Section 31. Thus, if a company files a shelf prospectus before issuing the first shot of shares, then it does not need to file any other prospectus if the same category of shares is issued for a period of 1 year. But before every subsequent issue, an information memorandum is required to be filed with the registrar. Now, on the right side, information memorandum shall include what all things like new charges created, changes in financial position since filing of the prospectus, other changes as may be prescribed by SEBI. If a company files a reserved application for an allotment with advanced securities before making any changes, it shall be the duty of the company to inform the applicants of such change and that the applicants have the right to withdraw the application. The information memorandum or memorandum shall be deemed to be part of the prospectus. This is an example of shelf prospectus. SREI Equipment Finance Limited example. Then we talk about the continuation of types of prospectus. Abridged prospectus under Section 2, subsection A. A shorter version of prospectus that a company can issue under Companies Act 2013, with the primary goal of providing investors quick and easy to understand overview of the offer. It contains key information related to the company and the securities being offered in a concise and summarized manner. It needs to comply with the CB issue a capital and disclose requirements, Regulation 2018. Section 33 of the Act provides that a company shall issue no company form of application for purchase of any securities unless a breach prospectus accompanied such form. Deemed prospectus under Section 25. A deemed prospectus is a document that is deemed to be a prospectus even if it is not called it or title as such. As per Section 2, subsection 70 of Companies Act 2013, any document that contains an offer of securities to the public and invites subscription is to be considered as deemed prospectus. Examples of deemed prospectus: advertisements inviting subscription for its securities from the public, letter of offer inviting subscription from the public. A deemed prospectus will have to comply with Section 26 of the Companies Act and SEBI ICTR regulations.
Great.
Objects of
Sorry, I think yeah. So I think just we are closing the time now. So good readout. I think we are at least you are read throughout. What kind of questions you have in mind? Anybody want to ask questions? They can ask 5 questions over there. I'll share my screen just to give you a brief of the same content.
Yeah.
Okay, so to let you know that what kind of question may come, I'm just sharing my screen for a minute, and we'll talk about 2-3 questions over there, and then we can get across. So if you're able to see my screen, you have some sections over there which we read out. Section 23, 25, 27, 31, 33, 35, 34, 39. So these are the numbers will come, but in exam they will not come like that. Okay, so in exam what will come? Okay, sorry. So in exam what will come is nothing but they will. Okay, sorry. Give me a minute, please. Just yeah. So in exam what will come is nothing but they will talk about. Okay, so they will talk about what is deemed prospectus. So what you did is what we know from the readout is a thing, but you talked about that you have made a prospectus, fully functional prospectus. Think about draft, but you advertise into the newspaper. So question may come that what is exactly deemed. It will not come like that. They will say that you have a prospectus which you have advertised without any consent from the NCL. What is called? Maybe one. Then then there is a question will come that shelf prospectus is valid for how much month. So it will be, I think it's not there in your PDF. When you're giving the exam, in one of the questions they talk about that once you have raised the shelf prospectus, it will be there for 12 months, and then you can change the MOA and you can raise the money. And if you are not able to get across with that one, then you have to return the money on 15 days. So there are 3 questions are there in the shelf prospectus. So out of that, one question is not there in your PDF, but 2 questions are there when to return the money, right? Same like that. Final prospectus is there. What is abridged this one. This is a shorter version of the things. If you don't give, if you raise this one and then don't take things, what is the penalty? 50K is the penalty. In one of the question it is there. There is ICDR is there, is mentioned there. This is the authority for capital and disclosure. So for raising any prospectus, you have to raise your financial statement and everything to ICDR. This is one of the part of your government section. So they may ask you in one of the questions that ICDR is found that you have some problem with your prospectus. What kind of penalty they can put across? They can put anything. And then how the steps will go, they may give you 3-4 steps. Out of that they'll say that okay, draft you have prepared, justification given to all the people that why I'm raising money, like we have also seen in our one of the scenario. 20 days or 21 days notice to the GM, because we know for general meeting we need 21 days. Then advertise in 2 newspaper. The steps you have to remember. And if you don't fail, there are 2 cases are there. We already talked about civil and 3 years. Civil is nothing but 35. This section 35 which talks about the civil, this one, because you're not giving monetary kind of a fraud to them. If you say monetary, then criminal will come, and it's not, sorry, it's not 50 lakh, it's because it's some amount they will go. And minimum subscription is how much is this? We know that 90% should be there. If it's not there, within 15 days you have to. So what they do, they keep this money into a different account. So a question may come that what kind of what you will do with the money. So you know that you have, if you're not able to achieve 90%, you have to keep the money in some account and then refund. So these are some kind of things will come. Ramesh sir, in the exam, what kind of like when you gave the exam, anything you got across, like any issue you found with respect to prospectus only?
No, I didn't take any exam as of now.
Okay, give the skill arbitrage sample exam. I think
Yeah,
the mock test.
yeah, I'm planning for that. I
Please,
didn't
please.
take anything yet.
Don't worry about it. Just take it. Okay.
Thank you. Yeah, sure.
Okay, sir.
One question, Sitaram.
Yes, sir.
Are sections numbers we have to remember?
No, it's not required. But what they do, they sometimes refer the question with the question number. Normally they give the name, but it's better to have a understanding of that. What is it means by? But it's not mandatory.
Okay, and this justification after the draft resolution, justification is to be given to whom?
No, to the board member, no, in the GM general meeting, you
Okay,
have
in the
to
GM.
tell them, yeah,
Okay.
why you're doing before going to
Okay.
the newspaper. Yeah.
Oh, right.
Okay. The next slot is for Captain Kumar. I think he's not there. Mansi madam, are you okay to share your screen and talk about share captain?
Actually, I am outside.
Sorry.
Actually, I'm outside. I'll not be able to read. I can only hear.
Okay.
So sorry. Yeah.
Yeah, I am here. I am Paritosh here. I am there in the meeting.
Yes, sir. Please share your screen. We'll start your 5 minutes for this one, and then please.
Sorry, somehow I am not able to. Can you do me a favor? Can you please share your screen if you have page number 36?
Give a try once. Otherwise, I'll share.
How do you do that?
There is a button there, third button, which talks about present now. Is there? After video, there is a button called as present now. Share screen? No?
No, I am on mobile.
There is a arrow mark in that square screen monitor kind of thing with the arrow, upwards arrow.
Arrow.
Okay, I'll share the screen if you are okay. So we are talking about share capital, and I think it will be in the starting, no?
Yeah, in 36, page number 36.
Yeah. So here we are. You're able to see my screen. Please go ahead.
Yeah. Thank you.
Yeah.
Yeah. So, agenda for today's class, that is share capital, meaning and nature of share. Identify the different type of capital, that is equity, preference share, and debenture, and know the procedure of issuing capital. So there are various ways to raise money. There are 3 main ways to raise money by a company to run the business or to expand the business. One is share capital. This could be either equity or preference share. Second one is a debt, by issuing debt instrument such as debentures or bonds. And third is deposits from open and public if permitted by the law.
Okay.
So what is share capital? It means the amount of money raised by a company through issuance of share. The company raised money by issuing shares. So that is called share capital. A company is incorporated with an authorized share capital, which is divided into smaller units called shares. For instance, a company with an authorized capital of rupees 1 lakh can be divided into 100 shares of 1,000 each. So value will be 1,000. However, each share may be issued at rupees 1 to rupees 5,000, in which case INR 4,000 will be premium. It was supposed to be issued at 1,000, but in market it was sold at 5,000. So 4,000 will be considered as the premium amount.
Okay.
So how is premium determined? The amount is determined at the time of issuance of shares as per method specified in the SEBI regulations. The premium is determined by various rules. There are 4-5 rules by which the premium is determined. After the company is listed and the share is trading on the stock exchange, forces of demand and supply will determine the price of the share. There is no relationship between the face value and market price of the share. Market price can be anything. That will depend upon the demand and supply of the share. For example, the above share could trade at rupees 10,000 in the secondary market, INR, in NSE and BSC. That was on the 28th February 2023. Does this premium benefit the company? Yes. Increase the valuation. Kind of share capital, that is equity share and preference share. So main difference between equity share and preference is, equity shareholders are actual owners of the company, but preference share, they are not owner of the company. There are various other differences, like it has voting right, and other does not have fully voting. They have voting rights in various other situations, like if 2 years have passed, they have not received the dividend for 2 consecutive years, they will have the voting right what the equity shareholders are having. So there are certain conditions when preference shareholders will also become have the voting rights. So one of them is if they do not get
Sorry.
dividend for 2 consecutive years.
Okay, so I think sorry, the time has got up now. So there are 4-5
Yeah.
questions over here. I'll quickly go through this particular thing. So in this one, this what chapter we talk about? Share capital, depth, and deposits are there. These 3 chapters are there in your book. So if you read through down, share capital, they will talk about equity part of that. Depth is something, but you will talk about loans and bonds and debenture and bond. So in this book, there is nothing called as debenture and bond has been mentioned. So you have to read these through your Google sheet only, but only one question may come, and then we have a bigger chapter on deposit which we know about, right? In this they will not talk about the market value and what is called share, what is market value, what is face value. This is known that people will know that. What they will talk about in this chapter, they will talk about, okay, which share has some kind of voting rights. So then we know that equity share has a voting right, preferential doesn't have. What is the maximum number of years a preferential share can be given, which we know is nothing but 20 years. What kind of who will be given preference for paying the dividends? Then we know
Preference shareholder.
preference shareholder. During what situation they will be paid? If you're given the mock test, there are some questions are there which talks about what cases the preferential share will be given the rights over the equity shareholders. So whenever there is a payment of dividend, or we are talking about when the winding up, there is a third option is also there which I don't remember, but it may come across for that. And in this one, how the steps will go, like how you will give the public offer, how the right issue is given, how the bonus shares are given. In this one, there is a question comes over there: can a share can be given to a independent director or not? We cannot give share to independent director, right? There is a difference between dividend and bonus. What will be the preference of that? Can we give bonus first or dividend first? There is a one question on that one. Sweat equity can be given to whom? So these kind of things are there. If you go to right issue, how much days, minimum, maximum days of this one. So if I go through that particular chapter summary, let's go to this. So you have these questions over there. 50% in a year, minimum 200 people can go. How much days you have to give? You have to issue in 60 days, return if you are not able to do anything, return in 15 days, and then you have to give a interest rate of 12%. What kind of things will come? Equity, preferential, debenture, bond things will come. And under that, movable property is nothing but share and debentures are movable property, which you can move from one person to another person in case of some issue, right? You cannot go beyond depth. Is what is the ratio for that one? 2:1, which is there in the book. Equity and this one, no voting. It has voting rights. He is not an owner, no voting right or limited voting rights. Only can be given preference while paying the dividend. First, it will be paid to preferential and then to this one. Debenture is not given in the book. You have to read by this one. Only one question may come: is it convertible or not, or redeemable or not? So no voting rights, but it's convertible. It can be converted to equity, and maximum 20 years. Sorry, this is written 30 years, but it's maximum 20 years. And then you have other things over there. What exactly public offer? How the things can be done? If you're not subscribed more than 90%, which we have already discussed, they will ask you at what case you have to return back the money, at 90%, 95%, 80%, 85%, something like that, and within how much days. There may be a question on that one. Sweat equity can be given to employees or directors. Why directors now? Because if they are a specialized work they are doing, then it can also be given to directors to motivate them, and employees also. So question may come that sweat equity can be given to whom? They will say private partner, somebody else, SME, or this one. No, sweat will go because it's your sweat and hard money. So it will come to director and employee only. So
but
what
not
is
to the independent directors?
Independent director? I think sweat also cannot be given.
No,
I don't think it
no,
will.
no,
No.
no.
Can you do transfer? Shares can be transferred, right? Then they will talk about bonus, fully paid up. It should be fully paid up, and you should have a reserve, and it should be paid from which account? So there is some 3-4 accounts are there which you have to remember. Free reserve is nothing but you have some money which is free, you paid it. Secure premium. What is a secure premium account? Just Google about that. What exactly it is a thing, but you have 10 rupees share which you are selling in the market at 90 rupees. So that you got a premium of 90 rupees. So that 90 rupees is called as that, where the amount will be kept over there. That account is called a secure premium account. You cannot pay the bonus from your own reserves. You have to pay it from the either free reserve, which is kept it free, from the secure premium account, which is nothing but a account where the money of the premium of your share has come. It will be from the capital redemption only. So just Google about this. You'll get the idea. And in case of bonus, you cannot default for interest in last 3 years, something like that. So there is a rule for that. You cannot go for, you cannot pay, like think about you have to pay your PF, but you have not paid the PF to your employees. You cannot give a bonus to those that time. You have to clear all the things, make a statement or the, what you can say, you have to file that particular statement, and then you can go for this one. Otherwise, so this question also may come that in one case, think about you have defaulted on the interest of the PF. Can you pay the bonus or not? No. So this may come as a question to you. So these kind of boundaries will come in this particular chapter. You just need to remember the boundaries for how much days kind of thing. 15 days to how much days, 3 days to this one. So these are from which account it will come, from where it will come, things like that. Right?
So, Mr. Sitaram, can I just ask you a question? Like
Yes,
the notes that you were just showing us, is those prepared by you?
Yeah, this is prepared by me because during the preparation of the exam, I just kept everything over there so I can refer it later also.
Okay.
Here it is, private placement is showing 50%, but I checked, it was showing 200% it can be given to, as per, Company Act 2013. As per Company Act 1956, it was 50. So I think there is some error we need to correct.
So in the exam, they will give you the date also, which Company Act it will be. So
Yeah.
you correctly caught me over there, but yeah, they will give you the date They'll give you, less than 200% should be there. You cannot go beyond it in a year. If you're, and one question was there, if you're paying more than 200%, what will be that called as? That share will be called as? Then it will be
It's
equity
public
only.
offer.
Public offer.
Yeah, yeah,
Correct?
yeah.
Thank you, Ramesh sir. I think we'll go to the next